Capital One has announced a $35 billion agreement to acquire Discover Financial Services. The two firms are the fourth and sixth largest companies issuing credit cards to American consumers. They'd be number one if the deal is approved by regulators. For more on what that agreement would mean for consumers and the economy, we're joined by Lucinda Shen. She's a financial technology reporter at Axios. Lucinda, thanks for being with us. Why does this make sense for each side in this merger?
Sure. So there's a lot of reasons why this deal makes a lot of financial sense for Capital One and Discover. So to start things off with, why now? The answer is quite simple. The price is cheap for Discover. The company has really lagged behind its competitors on the stock market. When you compare it over a one-year basis to its other players in the space like Visa or MasterCard or even Capital One, they've all been up around 20% or more in the last 12-month period, while Discover has really lagged behind. And one big reason for that, and it's also one big reason why Discover makes sense to enter into this agreement in particular, for Discover at least, is that they are currently dealing with a lot of compliance issues. They've been issued a consent order from the FDIC. They've also been dealing with allegations that they overcharge merchants in years past. So those are parts of some of the very major reasons why. And it's also meaningful to mention that the entire credit card payment space right now is incredibly complex. So if you are a consumer right now, the credit card may look like a simple product, but you're actually passing through several different players. So you are dealing with the card issuer, and you're also dealing with the credit card network that communicates with the bank, with the merchants. And so this simplifies that entire process. And so as a result of that, by Capital One buying Discover, which is the network, they are now simplifying the stack. They are now, in theory at least, paying less in fees.
So if they're paying less in fees, what's the upside for consumers from this greater streamlining? Do they get lower annual fees or anything good for them coming out of this?
So that's going to be the big question that regulators are going to be asking about this deal. I'm sure folks have seen the headlines at this point. And as you mentioned earlier, this is going to be the biggest credit card company by volume if this deal is completed. And so one of the biggest challenges that Discover and Capital One are going to have to say is they're going to have to convince regulators that this is good for consumers. One argument that they're definitely going to make is that Discover is the smallest credit card network. They're the fourth. They're the smallest. They're the fourth of the four large players in the United States. And by virtue of that, they are going to be able to, by having this merger, they will be able to compete with Visa and MasterCard, which currently is the big bad in the network space. A lot of regulators and senators have already been concerned over how Visa and MasterCard have about 85% of the market share in the network space. So if they can argue that this merger is good and in a way that they can compete against those two players, they might have a good chance of making this deal happen.
And just in the short period we have left, does this tell us anything about the state of the economy, either the way consumers are behaving or opportunities for companies like this?
So I think what this deal really tells us is that there has been some sense that the consumer in general, I think, is in a stronger shape, in a relatively strong shape. They have, however, seen some weakness when you're looking at the delinquency rates for Capital One and for Discover. But on the bright side and on the upside is that this deal is happening, and that the deal has been agreed upon, I should say, by the two players, and that it's coming at a premium to the market price of Discover currently on the market. And what that does tell you is that Capital One at least has confidence that this company is going to grow and be accretive to its own business model.
And that the delinquencies won't continue. Lucinda Shen, fintech reporter for Axios. Thanks a lot.